Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video. Greetings everybody. So guys, let's continue our discussion of the gold market. Yesterday we have come to conclusion with a couple of moments. So first of all, we said that minor bounce could happen here because market, as you can see, right now stands at daily oversold and major 50% fib levels, 1210 area. This is a very important level, so you can see right from that low to this top, 50%. That's why we said, well, maybe some bounce should happen based on logical and market mechanics of the combination of the fib level and the oversold. This in turn could be called as the Giordanopolis stretch pattern, but Giordanopolis usually use 3.8 and 6.18 fib levels. He doesn't use the 50% levels. So anyway, combination of the fib support and oversold would support market for some time and even trigger some minor bounce here. That's the first moment. The second moment, at the same time, we said that we think that this retracement will be very small, not really significant. And the major reason for that, existence of the uncompleted ABCD target slightly below the market. So we have this large A, B, C top D pattern and hasn't been quite completed yet. And the major reason why market hasn't dropped directly to the target is existence of the support and oversold condition. The fact that market should drop here stands not just in existence of the target but also in the speed of this drop. So you can see almost the vertical line right after elections from that top to this bottom directly to the 1210. It's very fast dropping. When the market has so strong impulse to the downside, usually it continuous action not just to the closest nearest target, but when the market forms a BCD with such strong CD leg, usually after some upward bounce, when the ABCD EB equals CD target is completed, after small bounce it moves to the next one. It's 127 or 1618. That's some view on the perspective of the current action. But right now on the current week we are mostly watching for this minor bounce. So what we have on the 4-hour time frame chart, market is forming some such sort of the action. So you can see it, we have discussed this yesterday. Here we do not see any signs of the thrust. We said we haven't got the Giordanopolis bread and butter trade. The one thing that we could get, as we said, is the double repo pattern. But at the same time, as you can see, it's not quite the double repo, because when this closes above the 3x3 close, below stands too high. So we do not have equal bottoms. The double repo should have approximately equal bottoms. This is necessary from the market mechanics point of view, because the second bottom of the double repo is the attempt of the market to push price for the previous lows. The attempts of the bears to trying to reestablish upward direction, because those who entering short on the second bottom of the double repo, they think that this is just a continuation. This was minor retracement. And the nature of the double repo is the failure of the bears to push market through these lows. It's some kind of the capitulation that usually leads to the very strong opposite direction. When they're trapped in the wrong direction, their stop starts to trigger, and that leads to the very fast action of the double repo. But here we do not have that. We do not see this. Mostly is just a retracement after this move. This is not the attempt of the continue move lower. That's why probably here we can't talk on the double repo as well. One thing that we could talk about here is just some kind of the bearish pennant probably. And another pattern that could be formed that we discussed yesterday, that could be the butterfly. So it could really happen that market just will spend some time in a flat action just to abandon the uncomfortable oversold area, and then will make the drop right to the target of the ABCD. This drop in turn could take shape of the butterfly. So for example, if market start dropping right now. It could be something of that sort. And this drop by the butterfly could let market to complete directly the ABCD on the daily chart to form reversal pattern and finally trigger minor retracement that should follow, and that seems more logical after completion of the ABCD rather than before that. That's our view on the gold market. So it means, shortly speaking, which is the conclusion, is that currently do not take any long position. If you still would like to make some scalp long trade, bullish trade on the gold, wait when the market will complete a BCD target here, and only after that drop your time frame, watch for reversal patterns, for example as this butterfly on the lower time frame chart. If you will get it, you could try to make the short-term scalp trade. For daily traders who trade on the daily chart, ignore any bullish patterns on the intraday chart. Do not trade market long, and use this opportunity for when the market will start a retracement. Just use this rally for selling, not for trading, but use rally for selling. That's for those of you who trade on the daily. Who trade on the intraday charts, yes, they could try to make the scalp bullish trades, but as I said, not now, but when the market will complete the daily ABCD, and when it will form and complete some reversal pattern, for example as this butterfly that we have just drawn.